You've been in this space long enough, whether you've been actively holding XRP or HBAR, or even just watching from the sidelines, you know this market has a pattern. It moves fast. It's loud. It thrives on attention. This space loves noise. One week it's about the latest meme coin that pumped 400% overnight. The next, it's a brand new layer 1 promising to kill Ethereum. Then it's AI tokens. Then real-world assets. Then some made-up trend we'll all forget in a month. Speculation fuels headlines. Hype fuels liquidity. And narrative cycles? They come and go faster than most people can even update their portfolios. The result? Most of the market moves on emotion, not insight. On what's shiny, not what's solid. And yet, in the middle of all that chaos, two tokens have refused to play that game. XRP and HBAR. Not because they aren't exciting. Not because they aren't capable of moonshots. But because they've been building something completely different from the beginning. They've stayed consistent. Not by dominating your Twitter feed. Not by chasing influencers or TikTok trends. But by doing what most projects in this space still haven't figured out how to do. Build infrastructure that matters. Not products for hype. Not ecosystems for the sake of TVL numbers. But infrastructure, the kind that systems, companies, banks, and governments can actually use. While everyone else has been focused on the next shiny thing. Chasing meme coins, farming airdrops, writing vaporware narratives. XRP and HBAR have been quietly laying foundations. Foundations for real-world use. Foundations for institutions, regulators, enterprise builders, not just traders. Foundations for the kind of world where blockchains and distributed ledgers aren't just toys for early adopters, but tools that power how the next version of society operates. This was never about short-term pumps. It was never about flipping NFTs or catching hype waves. For Ripple and Hedera, it's been about something much bigger. A seat at the table where real systems are designed. The systems that move trillions of dollars every day. That issue money. That manage identity. That track energy. That connect countries. And now, in 2025 and beyond, the entire crypto space is finally being forced to grow up. Regulators are stepping in, and they're not playing around. Banks are transitioning their infrastructure fast. Governments are actively piloting CBDCs and demanding accountability. Global trade is moving toward tokenized finance. And sustainability, energy use, carbon tracking, ESG compliance is now front and center. The days of just launch and see what happens are over. And that means the future of crypto won't be about the most viral coin anymore. It'll be about the most useful one. Not the coin that got the most views, but the one that solves real problems. The one that scales. The one that works with, not against, the systems the world already runs on. And when you look through that lens, XRP and HBAR suddenly look very, very different from everything else. They're not just ahead of the curve. They helped draw it. Now let's talk about HBAR. Because while Ripple has been carving out its territory in the world of finance, replacing outdated payment rails and working with banks, Hedera Hashgraph has been building something just as important and arguably even more ambitious. A foundation for everything else. We're talking about the non-financial but equally critical systems that make the world run. Supply chains, identity verification, environmental tracking, healthcare record integrity, government transparency, tokenized real-world assets, and yes, enterprise-grade stablecoin infrastructure. And here's where it gets even more interesting. Hedera doesn't use blockchain. It's not a fork of Ethereum. It's not a version of Bitcoin. It's a completely different class of distributed ledger technology, something called Hashgraph. Now, that might sound like technical jargon, but the difference isn't just academic, it's foundational. Most blockchains work by grouping transactions into blocks and chaining them together over time. Hashgraph, on the other hand, uses a unique consensus algorithm based on gossip about gossip. A fast, mathematically secure way to spread and verify information across the network. And what does that mean in real life? Over 10,000 transactions per second, not hypothetically but tested live. Finality in 3 to 5 seconds. Meaning once a transaction is confirmed, it's done. No forks, no rollbacks. Transaction fees under a penny predictable and stable. And energy usage so low it's been independently rated as one of the most efficient ledgers in the world. Put simply, no other public DLT in the entire crypto space offers this combination of speed, security, and sustainability. And yet, that's not even the most important part. Because while most networks are focused on being decentralized on paper, Hedera took a different path. Real-world governance. Transparent. Accountable. Powerful. Instead of anonymous validators or whale-dominated DAOs, Hedera is governed by a council of 39 global organizations, each from a different sector and geography, each running a node, and each having equal voting power on network decisions. Not just users, not just supporters, governors. These are giants like Google, one of the most data-centric organizations on the planet. IBM, the original enterprise tech titan. Boeing, global aerospace leader. Standard Bank, one of Africa's largest financial institutions. Dell, LG, Deutsche Telekom, Nomura, Ubisoft, and even University College London. And unlike partnership announcements that most crypto projects wave around with zero follow-through, these members are legally bound to the council. Their names, their votes, and their roles are public and enforceable. They don't just build on Hedera. They help shape it. They run it. And that governance structure gives Hedera something most crypto networks can only dream of: trust at the institutional level. There are no anonymous core devs with admin keys. No backdoor token mints. No governance controlled by a handful of insiders pretending to be a DAO. This is enterprise-grade decentralization, backed by real companies, real accountability, and real-world consequences. That's why HBAR isn't a trader's coin. It was never meant to be just another speculative asset. It's a trust layer for the digital economy, a neutral, scalable infrastructure for verifying, recording, and transacting data across industries. And unlike 99% of crypto projects that are still working on launching, Hedera is already in motion. Real applications, real data, real usage. Let's look at a few. Avery Dennison, the global supply chain tech company, is using Hedera to track billions of physical goods across the planet, ensuring authenticity, origin, and ethical sourcing. The United Nations, through the HBAR Foundation and various ESG platforms, is leveraging Hedera to tokenize and audit sustainability data, enabling transparent, immutable records for climate-related reporting. Shinhan Bank and Standard Bank, two financial giants from South Korea and South Africa, are running cross-border stablecoin pilots on Hedera, testing fast, cost-effective remittance infrastructure in real time. We're not talking about experiments. We're talking about live deployments with real stakes and real users. And that's what most crypto investors, even the ones deep in the game, still don't fully grasp. Because HBR doesn't make noise. It doesn't go viral on Twitter. It doesn't chase meme trends or celebrity endorsements. It builds. It integrates with governments, NGOs, and industry leaders behind the scenes, because that's where the real work is being done. And that's what makes it so powerful. While the market keeps cycling through coins with empty promises and unsustainable tokenomics, HBAR is silently becoming the protocol layer for everything the next decade of digital infrastructure demands. Low energy, high speed, enterprise secure, auditable, scalable, fully transparent. And it's already here, running, growing, evolving. If you're holding HBAR right now, whether you're fully aware of its scope or not, you're holding something rare, a token that doesn't just belong in the future economy. It's already building it. So now that you've seen what HBAR is actually doing, how it's building the trust layer for industries beyond just finance, let's zoom out again. Because what you start to notice when you step back from the details is something bigger than just two impressive projects. You start to realize XRP and HBAR are running parallel tracks toward the same destination. Different missions? Sure. Different technologies? Absolutely. Different use cases, partners, branding? All true. But fundamentally, both are doing what almost no other token has managed to do. They're aligning with the future of global infrastructure. Not just the future of crypto. Not just DeFi or NFTs or the next trading cycle. But the future of how the world operates, how money moves, how identities are verified, how data is tracked, and how trust is established in an increasingly digital, interconnected world. XRP is taking on the financial arteries of the world. HBAR is handling the nervous system, the records, the logic, the proofs. And what's happening right now, quietly, steadily, is that both are being integrated into real systems that people, companies, and governments rely on every day. This isn't some maximalist dream. It's already happening. Ripple is helping central banks build digital currencies. Hedera is enabling enterprises to issue verifiable green bonds. RippleNet is enabling remittances between the Philippines and Japan. Hedera is powering supply chain verification for billion-dollar manufacturers. And while the headlines are busy with token burns and celebrity meme coins, this shift is unfolding quietly, behind closed doors, where the real power lives. The difference is subtle, but critical. Most tokens are trying to disrupt from the outside. XRP and HBAR are being invited inside. They're sitting in boardrooms. They're listed in policy white papers. They're written into enterprise strategy documents. And most importantly, they're designed to comply. Because let's face it, whether we like it or not, the next era of digital assets is going to be regulated. The Wild West days are coming to an end. The networks that survive and thrive will be the ones that anticipated the shift. That built with accountability, governance, scalability, and legal compliance from day one. And this is where XRP and HBAR stop being just tokens and start becoming infrastructure, the layer under everything, the rails that future applications, financial, industrial, governmental, will run on. And here's what that means for holders. You're not just speculating on a number going up. You're not just hoping for a breakout or an exchange listing. You're holding strategic positions in the foundational fabric of Web3 and beyond. Think of the internet. Everyone focused on the websites, the browsers, the apps. But the people who built their futures on the protocols, the underlying technologies like TCP, IP, HTTP, DNS, they're the ones who shaped the modern world. XRP and HBAR are aiming to be those protocols, the trust layers and transaction rails that Web3, digital identity, decentralized finance, and tokenized real-world assets will rely on for decades to come. And most of the world still hasn't noticed. Because these tokens didn't ask for attention. They didn't go viral. They didn't chase headlines. They just kept building. And now, they're in the room. With the builders. With the regulators. With the people who are rewriting the global economic stack from the inside out. You can think of the rest of the market as the stage. But XRP and HBAR? They're backstage, wiring the lights, controlling the sound, and engineering the systems that will run the next act. And that changes everything. And here's the most important part. If you understand this now, before the market narrative fully shifts, before mainstream media catches up, before the retail crowd rushes back in, then you're already ahead. Because you're not just holding tokens. You're holding entry points into the next global infrastructure. Digital assets that aren't fighting for survival, they're being chosen for integration. That's the real story. XRP and HBAR are no longer speculative plays in the traditional sense. They're evolving into system-level technologies. Not because they got lucky. Not because they have the best memes or marketing. But because they've spent years, not months, doing the unglamorous work, building partnerships, earning trust, solving legal hurdles, scaling quietly, and delivering where others overpromised and vanished. When the market flips, when regulators open the floodgates, when CBDCs go live, when enterprises demand reliable digital trust layers, it won't be a scramble to create new infrastructure. It'll be a matter of who's already in place, who's ready, who's proven. And that's when XRP and HBAR move from underrated to undeniable. Not with a bang, not with a pump, but with global adoption that unfolds behind the scenes. Across trade routes, across data networks, across financial corridors the average investor will never even see. Because that's the truth most people miss about this space. The biggest changes? They don't make the most noise. They happen in silence, in compliance meetings, pilot programs, enterprise rollouts, and signed contracts, long before they show up on a chart. And that's why this moment matters. Because once the shift happens, once XRP and HBAR are no longer undervalued secrets but accepted as core infrastructure, the opportunity changes. It's no longer about being early. It's about catching up. So if you're holding XRP or HBAR, understand what you're actually holding. You're holding assets with a shot at becoming foundational, not just for crypto, but for the digital infrastructure of the next decade. You're not here for the noise. You're here for the blueprint. And if you stay patient, if you understand where this is headed, then you're not just investing in two tokens. You're investing in what's coming next. So stay focused, stay informed, because what's about to happen, it won't be loud, but it will change everything.